All right, let's unpack this BHP annual report for 2024. It's a bit of a beast, but you're interested in their business segments, right? And their financial performance, how they plan to create value for shareholders. We've got all that and more. Get ready for record production numbers, divestitures, a deep dive into sustainability efforts,
hmm
even a little bit of intrigue with a mine temporarily shutting down.
Well, what's really fascinating is how this report kind of reveals BHP's vision for the future of resources. I mean, they're not just riding the wave, they're trying to anticipate it, shape it.
Totally. And that all starts with understanding those core business segments, right?
Yeah.
I mean, everyone knows BHP is this global giant, but their focus on iron ore, copper, nickel, and potash is what I find really interesting.
Yeah, I think it's a strategic bet on those materials being essential. As the world's population keeps growing, cities expand, and that push for decarbonization intensifies.
Makes sense. So let's break down those segments, starting with the powerhouse Western Australia iron ore, or WAIO as they call it. They smashed production records this year, didn't they?
Oh, they did, hitting a new high and aiming to boost export capacity to a mind-boggling 330 million tons per year. And what's really impressive is they're doing all of this while remaining the world's lowest cost iron ore producer.
We all talk about efficiency. It's like they've cracked the code on producing massive volumes without breaking the bank. What's driving that success?
Mhm.
Is it technology, operational strategies, or it's good old-fashioned hard work?
I'd say it's a mix of all of the above. They've poured investment into automation, driverless trucks and trains, and using advanced analytics to really optimize that entire supply chain. So that lets them move huge amounts of iron ore from those Pilbara mines to the port and do it with just incredible efficiency. But it's also about constantly refining their processes, finding ways to squeeze more value out of every single step.
So they're not resting on their laurels. Okay, let's shift gears to copper. BHP has been on a bit of an acquisition spree, haven't they? Snapping up OZ Minerals, adding some serious assets to their portfolio.
Oh, absolutely. That acquisition brought in Olympic Dam, Carapatina, and Prominent Hill in South Australia, alongside, of course, existing powerhouses like Escondida. That's the world's largest copper mine. And Spence, which also had a record-breaking year. It's a very clear signal BHP is extremely bullish on copper.
And they've got good reason to be. Copper is essential for everything: electric vehicles, renewable energy infrastructure. As the world electrifies, demand for copper is only going one way up.
Exactly. BHP is strategically positioning themselves to be a dominant player in this absolutely critical market. And they're not just acquiring assets, they're investing heavily in expanding production and improving efficiency at their existing operations. Look at Escondida, for example. They're building a massive desalination plant to ensure that sustainable water supply, critical for their long-term operations.
It's impressive, that kind of forward thinking, anticipating challenges, investing in solutions. But let's talk about the elephant in the room, Cole. BHP is doubling down on steelmaking coal, but at the same time divesting some of their energy coal assets. So how do they reconcile that strategy with this global push for decarbonization?
It's a nuanced approach, and it's one that's definitely sparked some debate. Their argument is that high-quality steelmaking coal, it's essential for producing the strong, lightweight steel, the kind we need for things like wind turbines and electric vehicles. They also say that using higher quality coal can actually reduce emissions compared to lower quality coal in steelmaking.
So they're basically saying they're part of the solution, not the problem. But it is hard not to be a little skeptical. How can a company still so reliant on fossil fuels be a true champion of decarbonization?
It's a valid question, and one that BHP will have to answer ultimately with their actions. They've set these ambitious targets to reduce their own operational emissions, but they'll also need to show they're working to reduce emissions across their whole value chain, including those generated by their customers.
A high bar to clear, that's for sure. But it's one they'll need to reach if they want to maintain their social license to operate. In a world that's increasingly demanding action on climate change. Now, speaking of unexpected moves, that temporary suspension of their Nickel West operations in Western Australia, that kind of threw everyone for a loop, didn't it?
Oh, it did. The nickel market is notoriously volatile. Despite nickel being absolutely crucial for electric vehicle batteries, that oversupply and rising costs kind of forced BHP's hand to hit pause. They're saying they'll review this decision in 2027, which suggests that there's a long-term strategy still being formulated.
Almost like a game of chess. They're making strategic moves, anticipating those market shifts and trying to position themselves for long-term success. But it is a risky game, especially in a market as unpredictable as nickel. What are the potential consequences if they miscalculate?
Well, if they re-enter the market too late, they risk missing out on a significant growth opportunity. But if they jump back in prematurely, they could face further losses. It's a delicate balancing act. Only time will tell if they've made the right call.
Okay, so we've covered iron ore, copper, and coal, all pretty traditional mining commodities, right? But BHP is also making a play in a completely different market, potash. Their Jansen Stage 1 project in Canada is on track to start producing in late 2026. So what's driving this interest in potash, an agricultural commodity?
Well, potash is a key ingredient in fertilizers, and those are essential for feeding that ever-growing global population. As demand for food increases, so too will the demand for potash. So it's a long-term bet on that global food system. And it shows BHP is looking beyond just traditional mining to find new growth opportunities.
Seems like a smart move. Diversifying their portfolio, tapping into new markets, makes them more resilient to economic and geopolitical uncertainty, right?
Exactly. Aligns perfectly with their overall strategy, creating long-term value for shareholders. They're not just digging up rocks. They're thinking about the future, the resources the world's going to need, and about how they can be a leader in providing those resources.
All right, so we've got a good sense of BHP's major business segments, their production wins, and some of the challenges they face. Now, let's get into the nitty-gritty of their financial performance. What were some of the key highlights from the report?
Well, BHP delivered an underlying attributable profit of US $13.7 billion in FY 2024, which, demonstrates their ability to generate solid profits, even amidst all that fluctuating commodity prices and global uncertainty.
Not too shabby at all. What about cash flow? How much cash did they actually generate from operations? Because that's the real measure of a company's financial health, isn't it?
Absolutely. Their net operating cash flow came in at a hefty US $20.7 billion, which is remarkable. But what's even more impressive is the consistency. They've exceeded US $15 billion in net operating cash flow for almost every one of the past 15 years. That kind of stability is rare in the mining world.
It really speaks to their disciplined approach to capital allocation and their ability to manage costs, even when commodity prices are all over the place. This strong performance allows them to distribute a total dividend of 146 US cents per share for the year. So what else can you tell us about their financials, specifically from their balance sheet?
Well, at the end of the fiscal year, their net assets were valued at an impressive US $59.7 billion, with net debt standing at US $9.1 billion.
That's a pretty healthy debt-to-asset ratio. Tells me they've got a good amount of financial flexibility and for future investments and growth. Now, one of the most insightful metrics for evaluating a company's performance is free cash flow. What can you tell us about BHP's free cash flow?
Their free cash flow, that's the cash flow left over after covering capital expenditures, came in at a substantial US $14.6 billion for the fiscal year. This substantial free cash flow really highlights their operational efficiency and ability to generate cash from their operations.
It's a powerful signal to investors. BHP is a cash-generating machine and a good long-term bet. Now, before we move on, are there any other key financial highlights or insights you want to point out from the income statement or cash flow statement?
Well, I think it's worth noting their income statement shows healthy revenue growth, and their cash flow statement reflects strong cash generation from their core operations. Overall, BHP seems to have their financial house in order, wouldn't you say?
Without a doubt. They're a well-oiled, profit-generating machine with a keen eye on the future. But the big question is, can they maintain this momentum while navigating those complex challenges and opportunities of the energy transition? Let's delve into that next.
I think BHP is at this fascinating crossroads. I mean, they're this giant with a long history, but they're also making these bold moves to adapt to this rapidly changing world.
Right, and that's what makes this deep dive so intriguing. It's like watching this massive ship trying to change course in the middle of the storm. Incredible assets, proven track record of success, but they are facing some serious headwinds.
Yeah, one of the biggest, as we touched upon, is decarbonization. The world is demanding action on climate change, and BHP, a major producer of fossil fuels, is definitely feeling that pressure.
For sure, they've set that target to achieve net zero operational emissions by 2050, which seems ambitious, but is it enough? And are they moving fast enough?
It's complex. There are no easy answers, really. They're investing in renewable energy for their operations, exploring carbon capture and storage technologies, even working with customers to develop lower emission steelmaking processes. But they're also still relying on fossil fuels, particularly coal. And that makes up a significant portion of their revenue, as we know.
So it's a balancing act, trying to meet those global energy needs while also transitioning to a lower carbon future. And it's not just about reducing their own emissions. They have to consider those emissions generated by their customers as well, what they call Scope 3 emissions.
Exactly. It's about taking responsibility for that whole value chain, which is a huge undertaking. And it's not just the environment either, it's about social impact too. BHP operates in some of the most remote and sensitive parts of the world. Their operations can have a huge impact on local communities and indigenous peoples.
Yeah, they talk a lot about social value in the report, investing in community development programs, supporting indigenous businesses, promoting diversity and inclusion within their own workforce. But are those efforts genuine, or is it just PR?
It's a good question. I guess only time will tell. It's easy to make promises, much harder to deliver, especially when you're a multinational corporation operating in, well, pretty complex environments.
Totally. And let's not forget those geopolitical risks. The world is becoming increasingly volatile. Political instability, trade tensions, resource nationalism, it's all on the rise. And BHP operates in multiple countries, exposing them to all sorts of potential disruptions.
Oh, absolutely. Those risks can impact everything. Their supply chains, their ability to operate safely and securely. They have to be constantly monitoring that geopolitical landscape, anticipating potential threats, and developing strategies to kind of mitigate those risks.
That's high-stakes game, for sure, one that requires a lot of foresight and agility. They got to make strategic decisions today that could have huge consequences, 5, 10, even 20 years down the road.
Right. And that's what I think makes this deep dive so fascinating. We're not just looking at their past performance. We're trying to understand how they're setting themselves up for the future.
It's like trying to predict the weather. So many variables. Impossible to know for sure what's going to happen. But by analyzing the data, understanding the trends, and really considering those risks and opportunities, we can at least make some educated guesses about what that future might hold for BHP.
And for our listeners, it's about applying those same analytical skills to their own investment decisions, right? Don't just blindly follow the hype. Do the research, understand the company's strategy, assess whether their actions actually align with their words.
It's about thinking critically, asking the tough questions, being willing to challenge those assumptions, that conventional wisdom.
Exactly, because in a world that's changing as rapidly as ours, the companies that thrive will be those that can adapt, innovate, navigate that complexity with, well, confidence.
Okay, so we talked about the challenges. Now let's flip the script and talk about the opportunities, because despite all those headwinds, BHP is in a prime position to capitalize on some major global trends.
Right. The energy transition, for all its challenges, also presents some tremendous opportunities. I mean, the world needs vast amounts of resources to decarbonize. And BHP is a leading supplier of many of those very resources.
We're talking copper for electric vehicles, renewable energy infrastructure, nickel for batteries, potash for sustainable agriculture, even, as they argue, high-quality steel-making coal for building wind turbines.
It's kind of a fascinating paradox, isn't it? The very things that are putting pressure on BHP to change are also creating those new avenues for growth and profitability.
It's like they're playing both sides of the game, trying to profit from the transition away from fossil fuels, while still relying on those same fossil fuels to, well, generate a big chunk of their revenue.
It's definitely a delicate balancing act, and one that's going to require a lot of skill and ingenuity to pull off successfully.
But if they can manage it, the rewards could be enormous. They could emerge as a leader in that new energy economy, while also continuing to benefit from that ongoing demand for traditional resources.
It's a bold vision, and one that's not without risk. But BHP has a long history of adapting to change, overcoming challenges. They've weathered economic storms, commodity price cycles, geopolitical upheavals.
And they've consistently delivered value to shareholders through dividends and share buybacks. In fact, in 2024, they paid out a dividend of 146 US cents per share. That's a pretty sweet return.
It is, and it's a testament to their discipline when it comes to capital allocation. They're not just throwing money at every shiny new project, carefully evaluating each opportunity, making sure it aligns with their strategic goals and has the potential to, well, generate strong returns.
Right, and they're not afraid to make tough decisions either, like temporarily suspending those Nickel West operations, willing to take those calculated risks and make strategic adjustments to optimize that portfolio and maximize shareholder value.
I think it's that combination of strategic thinking, operational excellence, and financial discipline that's made BHP one of the most successful mining companies in the world. And it's what gives them a fighting chance of navigating those turbulent waters ahead and emerging as a leader in that new energy economy.
So as we wrap up this part of our deep dive, let's consider this. Is BHP striking that right balance between embracing the energy transition and maximizing shareholder value? Are they moving fast enough? Are their actions truly aligned with their words? These are the questions we'll explore further. As we continue our deep dive into BHP's 2024 annual report, we've covered a lot of ground. Financial performance, those strategic bets on future-facing commodities. But for me, it's those little details, the things that don't always make the headlines, that really reveal a company's character. What stood out to you as we dug deeper into this report?
Well, one thing that really struck me was their approach to safety. It goes beyond just preventing accidents. They're really trying to cultivate what they call a culture of care within the organization. They even discuss their approach to tackling sexual harassment, which isn't something you see every day in an annual report.
Yeah, that's true. Suggests they're trying to create a more inclusive and respectful work environment, which, let's be honest, hasn't always been the perception of the mining industry.
No, not at all. And it's not just talk either. They're backing it up with concrete actions, investing in employee well-being programs, promoting diversity, and really striving to eliminate fatalities and serious injuries.
Yeah, and they were very transparent about that tragic fatal accident at their Saraji mine, outlining the steps they're taking to prevent similar incidents. That level of transparency and accountability, it's crucial for building trust. Not just with employees, but with the public as well.
Absolutely. Shows a willingness to confront those difficult issues.
Yeah.
And learn from mistakes.
Now, another thing that caught my eye. That goal to achieve nature-positive outcomes by 2030. It almost sounds too good to be true. Can mining really be good for the environment?
It's a bold claim, and one that will definitely be met with some skepticism. But BHP's argument is that through responsible land management practices, they can minimize their impact and even potentially enhance biodiversity.
They're talking about habitat restoration, water stewardship, partnering with indigenous communities to protect those culturally significant areas. They even have a target of at least 30% of the land and water they manage under conservation, restoration, or regenerative practices by 2030.
It's ambitious, and remains to be seen whether they can pull it off. But it is a positive step. It aligns with this growing trend within the mining industry to move beyond just extracting resources towards a more sustainable approach, one that considers the long-term health of the environment and the communities where they operate.
It's a recognition that their social license to operate depends on more than just profits, right?
Yeah.
It depends on demonstrating that they're responsible stewards of the land and resources.
Right, and that brings us back to that central question we've been kind of circling around this whole deep dive. Can BHP truly balance profit with responsibility?
They're a company at a crossroads, embracing the energy transition while still relying on those fossil fuels, striving for sustainability while operating massive mines that inevitably have an impact on the environment.
It is a complex equation, no easy answers. But what's clear is that BHP is aware of the challenges and the opportunities. They're making strategic moves, investing in new technologies, and engaging in those conversations about their role in a changing world.
And for our listeners, as you dig deeper into this report yourselves and follow BHP's progress in the years to come, the key is to stay informed, ask those critical questions, and hold them accountable for their actions.
Because ultimately, the future of the resources industry and the role of companies like BHP in shaping a sustainable future, it affects all of us.
It's a conversation we all need to be a part of. Thanks for joining us on this deep dive into BHP's 2024 annual report.
It's been my pleasure.
And until next time, keep learning, keep questioning, and keep diving deep.